call the meeting to order. 6:09, sorry for being late.
I move to approve the agenda.
I will second.
Okay, all those in favor?
Aye.
Aye.
Yes. Contrary? Okay. Hey, I thought they approved the agenda of the meeting. Okay, so, we're going to do
Policy amendment.
policies next, before we do that, all right.
I move to adopt the amendments to policy 2014-01 committee policy.
I'll second.
Okay, okay. Any questions?
I do have a quick question.
Okay.
There seems to be just a little bit of duplication in the mandate and responsibilities under Infrastructure and Parks Management Committee and the Rural Plan Review Committee meeting. I'll go to the Rural Plan Review Committee first. The item under A says review and provide recommendations to council on rural plan revision bylaw requests. And so is the intention to have that committee long-term standing, or it's just going to, is when we get the rural plan
Yeah.
revised, it's going to be just the end of it?
Yep.
Yes.
Okay, that answers my question, because then that really isn't relevant.
No.
We'll deal with
Yeah.
bylaw stuff under the infrastructure and parks.
Yep.
management. Okay,
Great.
that's good.
Any other questions, comments? Okay. In that case, we'll call the question. All those in favor?
Aye.
Aye.
Opposed? Okay, motion carried. All right, in that case, I guess we're moving on to our financial statement, which we look forward to every year.
Of course. All right, so I put on your tables in front of you. Sorry, Darren, I didn't know you were coming virtually. I would have emailed you something.
That's okay, I'll get it to Jerry later.
Okay, so the first one is the supplementary Schedule A, which is actually at the end of the financial statements that we submit to the province. But this is how it's reported under the same format that you budget for. So this is why we go through this one in detail. And then we'll go into the financial statements, which is the second package that you've been provided. And then lastly, we'll discuss the management and audit findings letter that I'm presenting to you. So the first page of the supplementary Schedule A, the first column is your budget. The second column is what actually happened in 2023. And the third column is what happened in 2022. And the revenue is segmented based on your property tax warrant, which is your largest revenue item. Revenue from owned sources, so that includes the rent of this building, any grants that you receive that you've sourced outside of government, those types of things. Services provided to other governments, so that's anything that you do cost sharing with the adjoining LSDs or cities or villages or whoever you have an agreement with. Community funding and equalization, that's a grant from the province. Payment in lieu of taxes, we call it a PILT. This is also part of your budget. And the tourism levy, and then we bring in the surplus of the second previous year. So for the new councillors, when you're budgeting, if you have a surplus this year, it has to come in as additional revenue 2 years from now. So on a rolling 3-year period, you try to get to zero as much as possible. If there's a deficit in this year, then in 2 years from now, it will come in as an expense in your budget. So 2 years ago, there was a surplus of $42,000, so that has to come into revenue and be spent in 2023. On the expenditure side, they're segmented, and we're going to go through the details of what's in each segment. But this is your basically pillars of operation for your service delivery to the municipality. General government services, protective services, which in your case is mostly fire. Transportation, that's roads and streets. Environmental health, that's garbage collection. Environmental development is planning, beautification, those kinds of things. Recreation and cultural services, and then fiscal services. So the fiscal services are your debt repayments, any transfers to and from reserves, those kinds of things. So for the year 2023, you had budgeted $3.8 million in revenue, and you received $4 million. The biggest increase was in revenue from owned sources. So if you recall, when you're doing the budget for 2023, It was passed in the fall of 2022, and we're still ramping up from COVID. You didn't really know what the rentals were gonna be like. It's kind of a forecast where you throw a dart, so it's hard to adhere to budget for that. But all the things you had control over, your property tax warrant, you know, the services provided to other governments, your contractual obligations, those all came in fairly close to budget. The other item that was over budget is the tourism levy. So again, you don't know what that's gonna be because it's all dependent on accommodations, right? So you can't predict how many rooms are gonna be rented a year and a half in advance. On the expenditure side of things, fairly close to budget in general government services. Protective services were under budget. Transportation was way under budget, and we'll go into more detail in the next pages. Environmental health services was also under budget. Environmental development services was a little over. Recreation was a little under, but you made up for it in fiscal services to come to an almost balanced budget of $2,100 surplus. So if you think about it on a $4 million or $3.8 million budget, to come in at a surplus of $2,100 is pretty good. All right, so the next page we're going to go into some details. So your revenue from own sources are your building permits, interest earned on bank accounts. So of course you budget conservatively for interest, and then your savings and reserve accounts are in treasury accounts. So the interest is based on the Bank of Canada rate, and that rose substantially in 2023, so that's why the interest is so high. Community events and rentals, other rentals, recreation, provincial grants, and other, which is kind of a miscellaneous catch-all. So you have budgeted 211, came in at 349. Under general government services expenses, there's subcategories: legislative, which is expenses for all of you guys in this room, administrative, financial management and common services, and other general administrative services. So this is the cost to administer the municipality, essentially. So on the legislative side, it was under budget because there was a council seats vacant. Administrative side, salaries and wages were up a little bit due to just some overtime payments. The office building was under. Other is, which was budgeted, and I can't remember what was specifically in the budget under other. It might have been like a consultation study or something that just didn't get finished. And then the solicitor expense line, of course, was much higher due to unforeseen legal expenses. But overall, under administrative, you came in just slightly under budget at $328,000. Financial management and common services, again, almost everything was bang on budget. Other general administrative services, your insurance was under. The grants to organizations was just about on budget. The association membership and some other expenses were also very close to budget. The difference in the insurance, and Terry and I talked about this, is in the budget the last few years, the entire insurance for this building was budgeted in this line item. But when we come in and do the audit, a portion of the insurance expense has to be expensed under recreation, not general government services, because the building is split in two. So when we get to recreation, that's part of why it's over, is because it was unbudgeted insurance. So the next page is your protective services. So in the past, before the amalgamation of the local governments, there was just one protection line. It was paid to the province essentially for protection. But now that you've taken over the fire services, it's broken out into a few more lines. So there was a budget of $511,000 for fire, and it came in at $433,000. And the biggest difference was in equipment. So there was $50,000 of unspent funds for equipment maintenance. The force was about $11,000, so that's stipends, you know, just things to do with the firefighters themselves. The alarms were a little under budget, and training was right on budget. So again, because 2023 was your first year kind of budgeting for the fire services, I'm not sure your fire chief had to do such a detailed budget for the province in the past. So hopefully as the years go on, you'll get closer and tighter on those budgeted items.
And the equipment, that being off that 50,000, we were going to order bunker gear and we didn't get to do it.
Yeah, so
until-
that's part of what gets moved into
to the
reserve,
reserves.
which is reported under fiscal services
Yeah.
and not fire. Emergency measures, disaster control, dispatch, the Sentinel emergency alert system, and training and development, pretty close to budget. And then your animal and pest control contract, so your total protective services came in at about 525,000. Transportation is your street lighting, signs, the transit contribution to the RSC, and then other transportation. So there was planned at one point a transportation study of 150,000, and then it didn't get done in a year, so there was no expense for that. Environmental health is your solid waste collection and your solid waste disposal. Collection is a contract, disposal is your tipping fees, so it goes up and down based on usage, and then your recycling contract. So it came in at 661,000. Environmental development services, your planning fees that you pay into the RSC. Economic development contribution to RSC, so that's new, that's what you're paying into the RSC and then to Ignite. Beautification and other, so that's pretty straightforward. And then the tourism contribution as well is a new line item of 57,000. So environmental development is about 480,000 total expenses. We're almost to the end of the detailed numbers here. The recreation and cultural services, so your sports and recreation fees, the cost of running the community center personnel, parks and playgrounds personnel, contribution to other government was last year, so there was nothing for that this year. The contribution to the RSC, administration personnel. So again, like fire, it was just broken out into a few more categories. So the biggest differences in this one was it was a little more spent in the community center. So again, that insurance adjustment, so it was under in insurance in general government services, over in insurance on the community center line item. So they balance each other out. Parks and playgrounds, so there was some stuff planned that didn't get spent in the parks, so you were about 30,000 under in parks and playgrounds. And the administration personnel for recreation, the position was vacant for a portion of the year, so that's why it was under in that line item. And then we get to fiscal services, so your debt charges, your interest on your long-term debt, we know what that is going forward because you've got locked-in interest rates. The principal portion that you pay on those loans. Capital lease, so there was one fire truck you acquired on amalgamation that was under capital lease. And bank service charges. The deficit of the second previous year of the municipalities, the pieces of the municipalities that you absorbed had to come in as an expense. And then the reserve transfer, so your transfers to your own funds. So you spent out of operating cash for capital expenses, so tangible capital assets, 62,000. And then you had planned for a general capital reserve fund transfer of 130, but because you were underspent in a lot of the other line items, you ended up with a general capital reserve fund transfer of 670,000. So that money can be used for future investment. So I'm going to pause there to see if anybody has any questions before I hit the highlights of the balance sheet and whatnot.
I like the 2100.
Yes. Okay. So we'll move on to the consolidated financial statements. So the important thing that you pay us for is our independent auditor's report. So our opinion, I'll read into the record. We have audited the accompanying consolidated financial statements of the rural community of Hanwell, which comprise of the consolidated statement of financial position as at December 31st, 2023, and the consolidated statements of change in net debt, operations and accumulated surplus, and cash flows for the year that ended. And also the notes to the consolidated financial statements, including a summary of significant accounting policies. In our opinion, the consolidated financial statements present fairly, in all material respects, the financial position of the rural community as at December 31st, 2023, and its results of operations and cash flows for the year ended in accordance with Canadian public sector accounting standards. The rest of this report is the basis for the opinion, the responsibilities of management, and then our responsibilities. I'm not going to read through that all, but it's a standard audit report. So what does that mean? It means that we came in and we did the testing, sampling. We didn't find any indication that there were fraudulent activities happening or that there were material errors. So any errors that were found were corrected, and they weren't intentional errors. It was just something was posted in the wrong account, so we had to move it based on the accounting standards. So the first page with numbers on it on the financial statements is your consolidated statement of financial position. So if you guys are familiar with business statements, this is your balance sheet. It is a snapshot in time at December 31st. The thing with a balance sheet under public sector accounting standards is it doesn't balance. So basically it lists your financial assets, which are your cash and cash-like instruments. So you had total cash in the bank, including your reserves of $2.7 million. Receivables, general receivables, which is from the public, of $8,400. The federal government and its agencies, so there was $37,000 in HST that was due back to you at the end of the year. The province of New Brunswick and its agencies, we'll go into detail on that on note 5, was $84,000. And then there is a pension asset. So unlike you may have heard in the news that there's certain pension plans in the government that are underfunded, so they're making changes. Your portion of the provincial pension right now of what you've contributed is in a positive position, so it's overfunded. That's typical in organizations that have a midlife workforce, so you don't have anybody that's expected to retire right away, so that will balance out depending on the age of your workforce. So that's why there is a pension asset. When we get to that note, it's huge. It runs across 2.5 pages of your financial statements. We have no control over what the note is. It's given to us by the province and the actuaries on what we're disclosing. Our portion of that pension asset is. So total financial assets of $2.9 million. Liabilities, what you owe. So there's general payables and accruals of $93,000. It's a little higher than last year because there was a fire truck retrofit and a couple other things that were happening in December that didn't get paid out until January, February. But we look at all of those to make sure that there were subsequent payments made, and they all were. Deferred revenue, so this is revenue received in advance. Mostly it's gas tax funding. So this is like your unspent gas tax fund. But also in that category, and we'll see in note 7, is if you have deposits for community hall rentals. So if somebody puts a deposit down in December for a wedding in June, it's going to fall in this deferred revenue category. The accrued sick leave obligations. So you do have a sick leave policy that accrues, and based on the number of days that are available, and then as it gets used up, it comes out of this. So it fluctuates from year to year as well. And then your long-term debt, so what you owe on the money that you've borrowed from the Municipal Capital Borrowing Board. There's 2 main things in there. One is this building and the other one is the fire station. So you have net debt of $486,000, but you'll notice last year you had net debt of $1.2 million, so you're trending in the right direction. And for a relatively new municipality that's in the build phase of its life cycle, your net debt actually isn't too bad. Like if you look at the financial statements for larger, older municipalities that have aging infrastructure, their net debt is quite high. Your non-financial assets, so your tangible capital assets of $13 million, that's the money that you have invested originally in all of the buildings and equipment. It's about $7,000 higher, or $7 million higher than last year. and I'm gonna get into that when we get to that note, but there was assets contributed from the LSD on amalgamation that you guys now own. And that was the reason for the delay in your financial statements. We had these ready and had a review meeting. I had a review meeting with the mayor and the CAO back in February, towards the middle of February. We were ready to go, except we couldn't get numbers from the province on what the cost of the assets were. And so Terry tried really hard with her contacts at local government, and her contacts basically told her, we don't have them. And I said, that's, as an auditor, that's not acceptable. So I made some calls at the Treasury Board and sent a couple emails, and within a couple days, the contact from local government gave Terry all the numbers. So they did have them. Prepaid expenses, so these are monies that you paid in advance that haven't yet been expensed. Usually things that fall into that are like insurance policies. You pay it once a year, so there's a portion that'll be expensed in the next year. Also, if you've prepaid on consultative agreements or legal fees, it'll also fall in that bucket. So your accumulated surplus is $6.7 million when you add all of those things together. So the next page is the consolidated statement of change in net debt. So this is just how we arrive at that net debt figure that is on the balance sheet. So your annual surplus, which we'll go into detail on the next page, was $1.9 million. So this is where it gets confusing for you new counselors. We just went through the supplementary schedule that said you had a surplus of $2,100 for the year. But under public sector accounting standards, there's other things that come into play. So, for instance, the reserve transfers that you spend under we call it the old way of reporting, aren't included in the new way of reporting. So that's one of the big differences. The other difference is we take amortization on equipment under public sector accounting standards, and all the gas tax money that you've used comes in as revenue under public sector. So there's a bit of a back and forth. So you do have an annual surplus under public sector standards of $1.9 million. You acquired, so you purchased $1.7 million of tangible capital assets. You had proceeds on the disposal of, I think it was like a side-by-side or an ATV or a trailer or something of $2,400. And then the amortization of the tangible capital assets as well. And then the change in prepaids gives you your net debt at the end of the year. All right, so the next page is your consolidated statement of operations, your income statement. Some of these numbers are the same as what we went through before. So for instance, your property tax warrant doesn't change under the two different standards. Revenue from own sources is mostly there. Mostly close to what I had talked about before. The difference is the interest earned on reserve accounts comes into this statement of operations. Services provided to other governments is the same. Community funding and equalization is the same. Gas tax contributions, so that comes in. So there was $208,000 recognized out of your gas tax fund as revenue. And then other government transfers. So this is the net impact of the tangible capital assets coming into the municipality was a contribution from the province of $1.481 million. And then your tourism levy is the same. So under these standards, you had $5.6 million in revenue. Expenditures, again, very similar to what we talked about before. The only difference here is there is no fiscal services bucket. So bank charges and interest on long-term debt are reported under general government services. And there is no reporting of your reserve transfers or the principal payments on debt under these standards. So that's how we get $5.6 million in revenue, $3.7 million in expenses, so your annual surplus for the year is $1.9 million. And that's how we arrive at your accumulated annual surplus. The next page is your statement of cash flow. I'm not going to go into detail. We've already looked at all these numbers. This is just a different way of presenting it for the province. The purpose of the organization in the notes, note number 1, you are a municipality. Summary of significant accounting policies. None of these have changed from the prior years, so I'm not going to go into a lot of detail, but what this is basically how you account for things, how you budget, how you recognize your revenue, you know, what is considered cash and cash equivalents, what the details of what your segments are, like your general government services and protective and whatnot. Note number 3, at the bottom of page 9, shows your cash balance. So there was a very large balance on the balance sheet of 2.7 million. 2.762 million was the total, but 2.72 million of that is restricted. So that's money that's sitting in reserves or it's sitting in your gas tax account, and you can only spend it on specific things. The unrestricted cash at the end of the year was only $42,000. The next couple of notes just detail the receivables from the federal government. Like I said, it was your HST refund. From the provincial government, there was building permits receivable. The Department of Environment and Local Government, there was an amount receivable from them. And then the Department of Justice and Public Safety, there was also an amount receivable from them. So essentially all of that. Then we get into the pension asset note that I talked about, which spans over the next page and a half. Deferred revenue, note number 7, page 11 at the bottom. So you have gas tax funding. At the beginning of the year, you had $1.1 million unspent. You received $400,000. And you used $208,000. So at the end of December, you still had $1.338 million left to spend in your gas tax fund. And then your other deposits received, like I said, it's a very small amount, but these are the deposits on the rentals of the community hall, the activity for the year. Note number 8 is your accrued sick leave obligation. So what you had at the beginning of the year and what was added to it and then what was used. So of course you did have an employee that was out on a period of time for sick leave, so there was an amount that was taken out of this fund. Note number 9 is your long-term debt. So there's, like I said, there's 2 debt instruments. One is for the fire hall and one is for the community center. These are the balances that are still due on that debt as of the end of 2023. And then we list out the principal repayments, what you can expect to take into expenses over the next 5 years. The next couple of things are the borrowing compliance. So there's statements that you haven't borrowed when you shouldn't have, or you hadn't asked permission from the province. There was no interfund borrowing that wasn't explained or represented current year transactions. And there was no interim borrowing for capital. We also confirmed that all transfers of funds into and dispersed from reserves require a resolution of council, and that the amount held in the operating reserve cannot exceed 5% of the total expenditures that were budgeted for the previous year. So we do tests around that. So you are in compliance with that. The last note here is just that we may have reclassified prior year figures to conform to current presentation. That covers our but if you look at last year and there's like a rounding difference or something, that's usually what it is.
Jill, can I ask a question?
Sure.
So for the borrowing,
Mm-hmm.
like where we have money in our reserves, we need to go to the Municipal Capital Borrowing Board to get a fire truck
Mm-hmm.
or whatever. Can we put a hold on this fire truck without going on to the municipal, knowing that we've got the money in reserves if worst case scenario? I mean, they would never, our debt ratio is fine.
So typically, the process for going to the Municipal Capital Borrowing Board is you put a project in front of them and they say, yes, we will fund that. And then you go and buy it with your own money. And then the process of getting the loan comes. after.
Right.
So I would say to be in compliance, you should let them know that you're going to be asking for them to fund the fire truck. So you should put the proposal into them, and they say, yes, we will fund it down the road, and then you buy it, and then you go and ask for the money. It's a very convoluted system, but if you don't, you can't acquire an asset and then go ask them to fund it.
That's what I was wondering.
Yeah, because they'll say, no, we didn't know anything about it in advance. Yeah. Okay, so page 14 details your tangible capital assets. So we segment this into land, buildings, machinery and equipment, parks and playgrounds, and motor vehicles. So you'll notice that the net additions during the year are quite high. You didn't purchase all of these. These also include the amounts. They also include the amounts from the province. And on the official statements, this during the year has been expanded to say something more about the interim. So I must have printed the old ones before I changed that, but there is more words. So the ones that Terry has to sign, it outlines the $1.4 million of net additions less the accumulated amortization of the assets that came in from the province. So your balance at the end of the year is 13 million. Your accumulated amortization or depreciation of the equipment at the end of the year is 5.9 million. And the net book value of the tangible capital assets is 7.1. The next note is more on, for the province, they want to know how much of your property tax warrant is allocated to servicing your segments. The same with the sale of services, tourism levy, etc. And then how much was paid in salaries and benefits, goods and services, how much was reported in amortization, and how much was paid in interest across. For you folks, probably not a lot of value to go through that in detail, but it's one of the required notes that the province uses to compare one municipality to another. The next note is also your reconciliation of your annual surplus, so how we get from the 1.973 down to the 2100 that we had talked about before. Alright, so we're going to move on to page 17, your statement of reserves. So this is your balance sheet for your reserve accounts. So you have two reserves, your general operating reserve, which can be, you can pull money in for unbudgeted operating expenses, and your general capital reserve. So you have $121,000 in your general operating reserve, and you have $1.339 million in your general capital reserve. Also on this page, we have to disclose to the province what the treasury accounts are. And again, this is an old printout. I changed this last night when Stacy printed out the real statements this morning. The movement of the resolutions. I apologize. I'm going to read them out for the record on this one. So there were two resolutions that pertained to the reserves. One was on July 19th, 2023, and it was moved by Councillor Holly Hislop and seconded by Darren McKenzie that $15,000 plus HST be transferred from the General Capital Reserve to the General Capital Fund toward the purchase of a zero-turn lawnmower. And the other one was moved by Councillor Candace Decleva, seconded by Councillor Darren McKenzie that $670,000 be transferred from the General Operating Fund to the General Capital Reserve Fund, and that was in a special meeting of Council on December 20th. So we have to disclose those resolutions to the province as well. And the interest rates also changed on that statement. I had last year's interest rates were at 1.5. The Treasury account for the operating reserve is sitting at the end of December was at 4.8%, And on the general capital reserve was at 6.3%. So of course your treasury account, the more money you have in it, the more interest rates you go up. All right, we're almost done. Note number 17 is how we get from your operating budget to your public sector accounting budget. Note number 18 basically is all those detailed schedules that we went through in the supplementary schedule, but adding in the amortization and the things that I talked about in the beginning. And that's about it. I know I just threw a lot of numbers at you, but.
Okay. Thank you very much. Anybody have any questions? Did you ask Jill, or just make a motion first and then ask questions? If anybody has any. Dazzle. Okay. Well, if nobody has any questions, would somebody like to make a motion?
I move to approve the audited consolidated financial statements as presented by the auditor Jill Stair from Day Kelly and Associates for the year ending December 31st, 2023.
I will second that motion.
Okay, so now are there any questions, comments? All right. In that case, I guess we'll call for questions. All those in favor of accepting their audited financial statement?
Aye.
Opposed? Okay, motion carried. I guess that was pretty painless. Thanks, Joe, for coming and doing that.
You're welcome.
You can breathe inside.
You can sign that.
Well, and I took a bit longer because I'm aware there are new counselors and you might not have seen a set of public sector accounting standard statements before. It's a lot. If you take them home and look at them and you have questions, Terry has my email. I will try to explain where the numbers come from in more depth if Terry can't do it herself. So the last thing I just kind of wanted to go over is the audit findings letter. So it is addressed to council, so I have to present it to you all. Even though we work closely with staff during the audit, technically the auditors report to the council as a whole. So just to let you know, the audit status is complete. Significant risks within the audit. So common in most small organizations, the rural community lacks the staff to allow it to establish an elaborate system of internal controls. So there is a segregation of duties risk that we have to address when we look at the audit. So that just means that we don't have enough people, that one person is doing payroll, one person is depositing, a different person is collecting cash, and then a third person is making the deposits, and a fourth person is doing a bank reconciliation, and the fifth person is reviewing all of what those folks are doing. So you set up an elaborate system of internal controls to try to make it so that there's enough oversight that fraud can't occur. So you have a good check and balance system of requiring 2 signatures on checks. Expenses need to be non-budgeted, or capital expenses need to have a resolution of council before they can be purchased. You know, you have various committees that approve things. So all of you guys are in a good governance mode because you're a government. So that mitigates the risk of the fact that you have a small staff and there's no segregation of duties. So even though it's a significant risk in the audit, just to the nature of the size of the staff, we did not find any issues or any evidence that fraud had occurred or that an environment for fraud was present. The other thing that we addressed is just general controls relating to information technology. So IT policies and procedures should be formally documented and communicated to staff regularly. Management ensures that environmental risks, fire, smoke, water, power, temperature, humidity, all that kind of stuff to the computer locations are appropriately mitigated, and that you ensure disaster recovery plans are documented, tested, and updated regularly as part of the business continuity plan. So if a tornado were to come through and the building was razed, how would you operate as a government from an IT perspective? So you just kind of always have to keep that top of mind. It is something that auditors look at now. You guys are pretty good. You outsource your IT, you've got the ability to work from home, all of those kinds of things, but we need to highlight it, that it is always a risk because of cyber attacks. It's not a question of if, it's when things happen. So there were no significant difficulties encountered in the audit, and no significant changes in accounting policies. We didn't identify any alternative accounting policies that would be more appropriate. We did identify a significant accounting policy that's in a controversial area according to the province, and that is how you account for your sick leave accruals. The Department of Environment and Local Government recommends sick leave accrued benefits have an actuarial valuation done annually and specific reporting under public sector accounting standards. So it was probably 4 years ago that the Department of Local Government and us as auditors had a big fight about this, and we won. So we didn't believe that the cost of hiring an actuary, which would cost about $50,000 annually for an immaterial item really on your balance sheet, and because per the employment contracts, sick days are accumulated but not vested, which means that if the employee leaves, they can't take their sick time with them, which under the public sector accounting standards means that it does not have to have an actuarial. So we put this in the management letter because it goes to the province, because every year they question why we didn't have an actuary, and we have to remind them this is the conversation that we've had. And also because there's different people at local government reading the statements now. There are significant accounting estimates in the statements. All are typical based on the audit work. We're satisfied the estimates made by management. There's financial statement disclosures, uncorrected misstatements, everything has been corrected. Terry's doing the journal entries. There were no identified, other than the segregation of duties, that would think that there was any other deficiencies in internal control. Written representations, so when Dave signs the statements and everything, he's representing that everything has been provided to us. And then the last section, I've included the last couple of years. I was going to take it out this year, and then I thought, no, we have new counselors again. So it's other audit matters of governance interest. I'm not going to read it through, but you should have a read of it, and also there's some links to some resources on good governance policy for municipalities. And then just in conclusion, we'd like to thank management and staff for the assistance during the audit. As always, when we come in, we ask lots of questions and we ask to review lots of documents. And usually Terry or Sherry have their fingers on it. They know exactly what we're looking for. But yeah, there were no difficulties encountered, and we didn't, our spidey senses didn't tingle. We were happy with the results, so. You're welcome. And that concludes my presentation for the evening.
Okay. Anybody else have any questions for Jill or all of you? In that case, you would entertain a motion to adjourn.
I motion to adjourn.
I'll second.
I don't think we have to vote on that, do we?
No.
Do we? Okay. Okay, all those in favor?
Aye.
Contrary, you want to stay here all night?
Darren, are you there?
Miriam?
You okay with us?
You're okay with adjourning?
Adjourn?